There he is.
That's what happens when you put tape on the camera.
Whoops.
That's right. There you go.
All right, everybody. Welcome to the show, ladies and gentlemen. We got a bunch of stuff to get into. So yeah, let's get right to it. There he is, Angus the man. Okay, so got a bunch of updates here. As you may be aware, a bunch of assets went crazy, gold, Bitcoin, etc. We'll get into all that. Why don't we start off here? Won't be short-lived before JP Morgan says that we might see a global food crisis. Almost like deja vu here. We've been calling this out for quite some time,
Hmm.
based on just the cost of fuel alone, then compound that with fertilizer,
Hmm.
both of which are tied very much to Hormuz. So, what are your thoughts on this?
Well, this is very important in the respect of as we'll see with not just the oil producers that we've been talking about for some time, but we can extend the same thought umbrella, if you will, to the miners. The gold, silver, and copper miners. When I was doing my research in the space, there's a bunch of really, really great profitable
Mhm.
countries with or companies with like enormous cash flow and everything. But then when you look into it, like they had mines primarily in like Zimbabwe, Nigeria, Guyana, and other places where, when you run the numbers and you do the heat map, they're the ones that are likely going to be impacted tremendously by this upcoming. Well, it's current, but it's going to get way worse, right? It's
Right.
already bad. It's just going to get way, way, way worse. And that was sort of my guiding principle when it comes to what mining companies I choose to invest in.
Mhm.
As we talked about with the oil thing, ever since Nord Stream was blown up, that's when the market should have figured it out. But that's
Yep.
really the signal to where you want to invest in geopolitically stable and safe regions.
100%. So, on a similar note, we have been seeing quite a bit of inflation. Now, this is a kind of, I guess, nuanced topic, right? So inflation is usually touted as economic, being tied with economic development, right? So inflation is, we're told, just echoing the line, don't shoot the messenger, a good thing if the economy is producing. Well, what happens if the economy is not producing? And we still have inflation. That's very bad. That's called stagflation. The historians of the audience may remember in the 1970s we had such a situation called the Gulf oil crisis, and we're starting to see some of that now. But we're still seeing the crazy inflation that we had during the Biden era. So much for those campaign promises. It doesn't. It's likely not to get better. In fact, the global shift that we've been talking about does look like it started to hit the fan this week. We'll get into that with some of the charts. Why don't you give us your take on the inflation as we see here?
Um, So here's what's interesting is what we saw recently in the markets was after and again I don't even know what the cartoon that the political cartoon that I have for this one is pretty tremendous. I think you guys will like the thumbnail if YouTube will allow it. But essentially,
Zach never lets us down with those thumbnails.
yeah,
He's got some
this
bangers.
one this one's a real banger. It's a bang bang banger. It's but the So first of all, we had, and I actually, I don't know if I brought it up on the pod, but this overall macro structure I saw happening as soon as we started placing assets around Iran, and I saw the military buildup. I played the scenario out in my head, and then I immediately went to, well, if there's an oil shortage, then that's going to pressure countries like China, Japan, South Korea to sell treasuries in order to get cash so that they can then afford higher oil prices.
Mhm.
Okay.
Yeah.
So that's the crux of the issue, and then you add the petrodollar and everything else to it. So inflation has been building, as you can see, for quite some time.
Sure, sure.
However,
Yeah, go ahead.
recently, it's really started to pick up,
Yeah.
and Trump
We've gone hyperbolic
doing what
here.
right, and Trump doing what he's done in Iran. I don't want to say it was the last straw that broke the camel's back, but it was like the last. If one more straw would have broken the camel's back, this was like adding a sledgehammer on top of it.
Yeah, yeah, exactly. We
So,
could even kind of see it going hyperbolic here.
right.
And this, a lot of people like to blame this on Biden, which don't get me wrong, he did have a play in, but the Trump era has been really, really bad for that. So much for those campaign promises and how you read
Well,
this chart. Don't forget this is the cumulative inflation. People like to weasel their way out of, oh, we had a zero reading on the CPI. That doesn't mean anything, right? What you have to look is the cumulative CPI, right?
because you're
So
talking about rates, right?
you're
When they
talking
talk
about a rate
about
of
a rate,
change. You're talking about a
right, you're
rate of
talking about
change,
a change.
right?
Just because that rate goes down from where it was before doesn't mean inflation stopped. That
Correct,
just means
correct.
it slowed the
Yeah,
rate. That's all
yeah,
it means.
exactly. Even if you get a little number, it's still a positive number. Inflation still grew, okay? It's
Right.
just not at the rate that you were expecting from last time or whatever the situation may be. So the way to read this chart is, I think it's very, just to put plain numbers into things for those of you who aren't mathematically inclined or don't like to look at charts and graphs and stuff. What this is saying is that for every dollar in 1970, it takes $8 to cover that now, right? And this chart concludes in 2022. We're probably closer to nine, just rough
Right.
estimate, 859. So yeah,
But I
big.
just wanted to show what the rate, and again, if the rate were at one, okay, that's still not great.
Yeah,
Unless your income is say, changing by a rate of two,
yeah.
then maybe it's tolerable. But that's not what's been
Yeah,
happening.
and one of these days we'll put a data-driven podcast together and like all the stuff that we talk about. One thing that I like to mention is affordability in terms of housing, right? So what is the income, what is the inflation, and what does housing cost, be it rent or a mortgage or whatever. And you just see those graphs go whoosh, like this.
Yeah.
So
Mhm.
it's just not tenable in the long run. And so this is what we're talking about here with the percent change. Now remember, the previous graph, this is cumulative, this is percent change. Okay, it doesn't look as bad. However, still we have this monster here, which was generationally high inflation. And I believe that we're going to start, maybe this is your point, Zach, is that over here in 2026, we're going to start to see this type of thing again. Part of the reason
Mhm.
for this, obviously, look at the year here. A little tiny little thing happened in 2020, which caused the Fed to print, I believe, you have to fact check this. I believe it was $3 trillion into the market. And the exact verbiage of Jerome Powell was unlimited. So it's like we're just going to infinite money this situation away, and you could see the effect here. Right now, again, to our point, just because this graph fell a little bit, notice these numbers are still positive. Okay, so we're not going. The cumulative is still building. It's just not at the clip of almost 10% that it was over here.
Right. In my opinion, if you actually have a healthy economy, you should see deflation, which oddly enough, that's what they're experiencing in China.
Mhm. Or there's also, in economic theory, there's a steady state economy where it just kind of remains,
I'm talking about from where we are now. I would like to see negative
from
inflation,
where we
but
are for sure. I mean, we
yeah.
we need that. Negative inflation is often touted as a bad thing, but in reality, I think it's absolutely mandatory because we're basically off the rails here. Before we get into stocks, I did want to cover some of what the effect is of what we just talked about on the markets. First of all, let's take a
Hold
look.
on, Danny. Did you read the email that I sent?
Yes, these are. It's from this.
I
Uh,
know, but there was a whole yeah. I'm going to talk about the Treasury and the
Yeah, so
Japanese.
well, the Treasury, I'm just gonna go here, right? This is
Okay.
the Treasury. These are treasury notes. There are bonds, notes, and bills. The one that's traded most of all is the ZN. That's the 10-year T-note futures. That's what traders like to look at. It's kind of in the middle, right? So when you have like a really long duration, like the 30-year, that is looking at specific things, mainly like global inflation, stuff like that. The shorter term is going to focus on federal funds rates, right? Because they're very, very short term, right? You could have 1 month, 2 month, 3 month, 6 month, etc. Those are just looking at what is the Fed doing. They don't care about long term inflation and stuff like that. A happy medium is considered the 10-year. So we can see some selling pressure here. This is on the 30-minute chart. So nothing too great, nothing too substantial, but you do see this long term, right? We have this selling pressure. We have kind of established this little area of stability here. And this reflects, in my opinion, what Zach was telling earlier about other countries having to sell off this T note, sell off US treasuries to buy oil, which it has been steadily climbing. As you see here, our Elliott wave is right on point. We have clearly entered the first, if not the third, the power leg here, if you will, of the next impulse. You could definitely see some attempts. In my opinion, these are attempts at price manipulation. You see these red triangles here; those are it's basically telling you there's resistance. But the lid blew off here. We'll get to BNO in a second. I made some turned around some quick profit on that one. You mentioned the yen. We could look at the USD Jappy. This is how traders trade the yen. If we go here to the 1 day, uh, so yeah, so um, basically we're seeing a little bit of a sell-off here, as so we're trucking off here, um, as we see these things kind of take effect, right? Do you have is this kind of tracking what you're seeing?
Well, okay. What you're seeing here is it inches higher, and then there's a huge red candlestick down,
Exactly.
right? And what you're witnessing here with this volatility is okay. So what the U.S. Treasury doesn't want is the country that I believe has the most U.S. debt is actually Japan.
Mhm.
Here's the problem. Now it's Besant has said he would interfere, and this gets to my hypothesis on why I think Japan. Actually, go back to oil real quick. I'm going to show you something.
Oops.
Okay, all those red triangles that you were saying resistance, right? When you actually look, there have been periods that have correlated tightly with whenever Trump and Besant come out saying Hormuz is open or there's going to be a peace thing. There's one, I like to call it the whale of Hormuz.
Mhm.
Okay, there's one entity, we don't know who it is, that's going in and massively shorting crude at the same time as all of those positive headlines come out. And
Mhm.
that's where all these red tickers are. It's when they're trying to there's some entity out there that's been trying to short it to keep the price down.
Yeah.
My hypothesis has been this entire time what's happened is that entity is likely a Japanese entity, okay, that's shorting the market either with the nod or the not or the thumbs up from the treasury, right? Treasury saying we have your back in case you need that. That's hence why they have all those swap lines and stuff that they set up months ago.
Mhm.
Okay. Now the reason why I say that is Japan basically imports all of its raw materials.
Mhm.
Okay. Key of which being oil. Okay. So, since most of their flows actually came from the UAE and Saudi Arabia, right? Those aren't showing up. What we've seen since then is we've seen crude from the United States largely go to Japan, okay? And to sort of make up that, that deficit they used to get from the UAE and Saudi. And on top of it, they have a much larger SPR than us. They even announced a few months ago that they were no longer going to tap their SPR because they had signed long-term contracts with the United States, Canada, and some South American producers as well to supplement that. Okay. Now, what's interesting about that is the United States SPR, okay, has been tapped now,
Mhm.
right? And we're sending a lot of that SPR at suppressed prices, mind you, off to where? Japan.
Mhm.
And the US Treasury has stepped in now and said, hey, if you need to buy back the yen, right, we have swap lines and so forth where we'll help you do that too. Why is that? That's because the last thing the US wants, especially now that they've crossed the $40 trillion worth of debt, 27.6% of that Trump is responsible for, by the way.
Mhm.
Okay. Over $40 trillion worth of debt. The last thing the United States wants is for Japan to sell off all the debt they have. You
Mhm.
understand? And then cause basically a snowball effect with the rest of the markets.
Right.
So that's why you've seen this extraordinary push from the United States,
Mhm.
okay, to collaborate with the Japanese to help them with their yen situation.
Yep.
Unfortunately for everybody, including the US, by the way, Danny, is the Japanese are stuck in a doom loop. They're
Well,
just, it's a
they're
math
not the only
problem.
ones. They're not the only
Yeah,
ones.
no, they're not, but it's just a math problem. Like you
Yeah.
can't that
So
I don't they can't do anything really to fix the structural issues that they have. So
speaking of doom loops, here's the Dixie. This is the U.S. dollar index. If you recall, it's kind of like an average of how the U.S. dollar is doing against everybody else. So we saw some new lows since the previous pod. We were kind of holding this range, holding this low. We were in the hundreds for the longest time. Now, then we were in the 99s. Now we're testing the 98s. Have some pretty significant support here, but it's, if look out below because you see this vacuum area here to 98.22. The US dollar is definitely taking a hit. And you could see that in the inflows, for example, to Bitcoin. And we'll get to gold here in a second before we pivot over to our stock selections because gold is going to be featured quite prominently
heavily.
there. Yeah. So basically, we had this huge breakout. There's a lot of reasons for this. I believe that a lot of this is short liquidations, right? People who just had shorts sitting there forever. And, when you have one spike
Could
like this, and
you
you,
imagine covering that, Danny, if you had shorts on Bitcoin during this period? There's a lot of people that got hurt,
well,
man.
I think that's typically what you see here. So I think this spike was probably natural, and these little Elliott wave impulses were probably driven partially by buying, but also by liquidations. Having to cover. So we do see a similar phenomenon here with gold. Gold has been straight up and to the right for all of this month. Had a brief little period here. I think that this is a healthy growth too.
Right.
Contrasting with Bitcoin, I'm not so sure that this is healthy. We may see a strong retracement here, perhaps back to even 70. And you'll probably see that in a lot of these. This is Litecoin,
Yeah.
for example. I just can't see Litecoin holding the 50s. It'll probably drop back down here to the low 40s, 45 or so. However, gold, this growth pattern here is very sustainable. Why? Because we do have this push here, a nice little value area that's been established for 2 weeks, right? So it's really establishing a foothold, and then when you it looks like a big pump here, but it's actually quite modest in my opinion. So I know that the valuation of metals was in your email. So what did you have for gold?
Go back to Litecoin real quick. Um, did it start to what did it do today? Like, I'm just curious because I sold almost all of my Litecoin last night. when
Um,
it was this high.
so it's consolidating for the past,
Yeah,
yeah,
perfect because
yeah.
it's likely to retrace from here. So I sold
Highly
right.
likely to retrace. Yeah, in my
Yeah,
opinion.
so
Of course, crypto, right? I say that, and of course, it could rally to $100. You never know. But
you never right.
what's most likely? I'd give it a 75 to 80% chance that this is going to retrace really hard. Litecoin in particular is really bad about that. You'll see it make this huge gain, and you're like, oh, awesome. And then all of a sudden it's back to where it started. It's
Mhm.
very realistic that this is going to retrace the whole run. Bitcoin, maybe not so much. Bitcoin might retrace to, say, 72. Again, I think that these values, this much of a jump overnight is not sustainable, in my opinion.
Right,
The point of what I'm saying is that the increase in gold that is sustainable, and that's based on
100%.
how it got there.
That's why I'm not selling my gold. Instead, I took that I sold Litecoin and I went into I didn't go into gold ETFs or anything yet. What I did do was I bought up a whole bunch of miners though.
Yep.
Who
So,
are at a really really nice price point, and I looked at all their fundamentals. My rule for gold now is geopolitically stable, preferably in an area where like you're not going to witness food scarcity or fuel scarcity.
mhm.
Okay. But also geopolitically stable. That's largely US, Canada, Australia, Brazil, Mexico, some other South American producers or mines that are in South America. That's
Yep.
where I'm looking at for the mining space.
So
Um,
with
yeah,
that, we
so
could, yep, go ahead.
um, the reason why I'm really bullish on the gold and silver miners at the moment is what we'll see with the actual like cost per share that they have. They're super affordable right now, and they've just gotten out of like their biggest like lowest doldrums. So they're
Yep.
just sort of now picking up steam after
Yep. So with that, we could take a look at I structured this kind of backwards. We'll focus on this slide first, which is the miners, because it's a nice way to dovetail from what we were just talking about. Starting with AGI. AGI, again, if you're bullish on miners by way of gold and our outlook of gold, you're still early, right? So we do see this little bottom out here at 27.12. I don't think you're ever going to see that, at least not in the near future.
yeah.
Blasted through 33.79, and so we're now at 37.91. Just think about that. That's 27 to 37, right? We're looking at a 30 something percent increase,
Yep.
and we're not
Mine's
even.
mine says 24, but that's what I
Yeah.
have when I got it.
So, yeah, and clearly there's a lot of room to grow here, especially if gold does go the way that we expect it to go. 41, 24, 44, 57 is
Hold on. What I want to point out here on this graph, though, is if you want to go back to their last bull run that they had, right? Now, at their last bull run, where gold started for their last bull run, okay, was actually way. So what they do is they use cash to do all in basically the AIC AISC, that is all in sustaining costs. That's the cost of capital USD, okay, that is necessary for them to basically run their whole operation per ounce of gold,
right.
right? So their last break even that they have, and they actually in their last Q2 announcements for this one, it showed that they've actually reduced their all-in sustaining
Mhm.
costs by their goal is 18%, but they've already been able to accomplish 8%. So they're actually reducing the cost as the price of gold is rising. So you see how that's like hyper bullish
Yeah, yeah,
the
exactly.
overall stock because their free cash flow, even when they were in the doldrums down there, Danny,
Mhm.
were like extremely high. They've got incredible profit and cash flow.
Yeah, so
It's
we're seeing something similar here with KGC. I'm willing to bet that all of these are going to kind of look the same.
right, right.
So we have a 50% retracement here. This is perfect, even though we have this hyperbolic thing here. Again, still early. Looking at 25. The low here, probably where would it be? Like 22.49, blasted through 25.22, 31.27. Next target very easily excuse me, is going to be 34.88. New highs at 38.98. Again, very, very affordable. And just look at the technicals here. We just completed a full Elliott wave, corrective phase on into the next leg. So,
Hold on. Let me go into the company a little bit while you have it up. They operate. It's a U.S. owned company. They have mines in Nevada, Alaska, and Canada, geopolitically safe regions and oil producing ones. Their PE, depending on what day you buy it, is 8 to 10x, which is like when you're talking single digits PE for this particular setup here. That's really, really good. You
yep,
know, like that's pretty incredible. So, and you did AGI already, right?
yep. That was the first one we
Yeah.
did. Yep.
PE ratio there is anywhere again from 9 to 10. That's Canadian. They mine in Ontario and Manitoba.
Mm,
So,
cool. So the next one is BVN. I'm willing to bet that this one looks fairly similar. Yeah, actually, it does. Okay, so we're again seeing this hyperbolic thing here, and a nice little retracement, to 618. That's a great level for a bounce. If it goes the way the rest of them are looking, this is probably the start of the next impulse leg of the next Elliott wave, right? So we have 3360, nice strong level here, bottomed out around 32, sorry, 27, 56. And the ultimate target here would be 41.28, unless you're looking to ride this to 51.05.
now BDN, they're Peru's, I believe they're Peru's largest metals producer. They don't just mine gold, they mine silver, copper, and other metals as well. And they've got an enormous stockpile mining operation in, where is it? Yeah, Sierra Verde, where they get most of their silver and copper.
Hmm,
Uh, and the PE for that is 8 to 10 roughly, depending on what day you purchase. So,
interesting. HBM, this one's really going hyperbolic. Let's Hud Bay
mhm.
Minerals. Yeah, this one is already, I think that, this is might have missed the boat here. Great time to buy would have been 2071. This is an extended correction here. It'd be great if this was like a ranging area and we could expect it to pull back. I just don't know that we're going to see that. I would be shy at buying at these levels, especially because I think that the other ones still, comparatively, or at least technically, at more sound levels in terms of the profit that we could make. A lot of risk here in terms of a retracement is what I'm saying. But again, still in the 20s, 30s. That's a pretty decent bet. Some of the, like VLO, for example, we are talking $300. But all of these, $100 will buy you, one share of each of what we covered thus far. So,
Right. Part of the reason why you're seeing this enormous rally for this one in particular is because again, they don't just do gold, they do silver, copper, zinc. In fact, and they have, I believe, one of the largest mining operations in Manitoba, which is in Canada, and again, a similar location in Peru. And at least when I was looking at it, when I bought it, it was single digit PE. I think it was around 7.
mm,
So, given what the PE is now, you can do the math at current prices. But I mean, ideally, it would retrace, and then I could just
yeah.
get more.
And that
So,
happens. That's a perfectly reasonable expectation. All right, it looks like we've already covered BTG. Very interesting. I have the Elliott Wave retracement here at 38, 382, $3.80. Looks like we've already broken out quite a bit. So this is a I would put this under the win column of predictions of the show.
Yeah, and so it retraced to where it was.
So yeah, we had our Elliott wave impulse here. The corrective phase. I just kind of I just kind of stopped bothering the drawing this part because we see it. The more important one is the
At
corrective
sea.
phase.
Yeah.
Correct. Yeah, where C is in particular.
And
So
we mentioned this
380.
before, so that would have been a perfect buying opportunity for anybody who was interested in it to get in right there and look at how it ramped
Yeah.
up right after
Yep.
that.
Yep. So file that under the win column for the show.
100%. Yeah.
IG. Another one, perfect setup. Uh, you know, any Elliott wave doubters. I mean, this is just brilliant how it plays out. Again, I couldn't have planned this. I couldn't if I wanted to create fabricate an example of my technical analysis. I couldn't have done a better job than this, right? So we're seeing again this the C here is going to be right at point 0.5, right where you want it to be. And blast it off here from $13.37 to the 786 at 1985. At this pace, we could easily see 2470, right? I do expect that we'll probably do another little wave thing here, but I think that the target here would be 2470 if you want to hold this. Again, we're looking at like at least it was integer dollars, right? So I guess not anymore, but it's over $20 now. But still, that's a pretty good.
When we
Um,
mentioned it,
yeah,
yeah.
yeah. When we mentioned it exactly. So upside here is 3087. So not bad for a stock that is just over $20, right? So I have spent $20 a lot more foolishly, as Zach can attest.
That's an understatement. That's sorry, Danny.
Uh, EQX, sorry about that.
Yeah. EQX is a good one. And
Again,
that's
we've
one we
covered
covered before. Yep.
covered it on the show.
Mhm.
And look at this. Brilliant adherence to the Elliott wave. Typically, you don't. This is an exception to the rule. Typically, you don't want to see C go past 2. That's just a general no-no. But in this case, it ended up working out, and we see this huge rally here. So file that under successes of the show. I think I remember. Oops. I remember talking about this one because at the time it was like $8.79, and I was
Mhm.
like, you know what? Fuck it. Like, what could
Right,
go wrong?
right.
And yeah, if you would have gotten on in on this, you would have made over almost 50% profit just
Already,
off
we'll
this. Yeah,
revisit. Yeah, we'll revisit this in like a month,
sure,
a year,
sure,
or
yep.
whatever, and see where it's at. Because this is just the beginning of this bull cycle, Danny. This is going to be a hot and heavy bull cycle. I
Yep.
mean,
I
everything set up perfectly for it.
IAU, this is how I used to enter gold trades in the past. This is a very well established ETF on gold. Following the same kind of pattern here, you see the Elliott wave, corrective phase coming down to 74.12, and we have the strong pivot here. This is another one, again, if you're bullish on gold, just as a metal. I do believe that there's miners in here as well, and I recall it paying dividends. I'm just going to fact check that real quick. I'm not seeing the little dividend thing on here. Maybe they don't do that anymore. Maybe I'm confusing it with somebody else. Doesn't look like they do. Sorry about that.
Well,
But
I want to point out something though. Okay, so this is the gold ETF. Okay, so this is linked directly to the price of gold. Now,
right.
what are we seeing? What are we seeing reflected in the graph? Why I said last time I was so bullish on the miners, with the direct setup that we have, and how the value of gold since the last cycle is so much higher, right? That means their free cash flow, their operations have grown more efficient. You understand? So lower cost of capital, but the stuff they produce sells at a much higher dollar point. So we're seeing a way more torque with respect to that delta when they go up.
Mhm.
Do you see the
Yeah.
difference
Yep.
here? You can
Absolutely.
see the leg up there, but it's not near as enormous as the miners that we brought up.
Yeah.
Right.
Yeah. Exactly. That's a good point. SR, I'm not sure if this one's going to pull up. SRBIF. Oh, okay. I guess it did. Yeah, this is no over the counter. It's considered a penny stock. Um, there's kind of a lot of reasons for that, but you see, unfortunately, we see this choppiness here. That's due to a lack of liquidity.
Mhm.
However, what we do is we see a great technical setup here in terms of that ranging that I was talking about. Remember, if we set this, and again, due to the lack of liquidity here, if we it could very easily. You see this jitteriness. Lack of liquidity is a fancy term for this kind of schizophrenic looking, that's just because there's just not the kind of throughput that we see in, say, an ETF or something traded on the NYSE. So 316
Not a
is
lot of buyers and sellers.
not a lot of
It's
people coming to the table. So, if there's only like a few buyers and sellers, the price is, the set of all prices could be a lot more dispersed than if there's like hundreds of thousands or even millions of buyers, right?
I believe this company, Drunken Miller owns, I'll double check that, but I believe Drunken Miller owns the sustaining, or owns like controlling shares in the company. I will say about this company, even though it's, I guess you could say a little wonky or penny stocks, for me, since I mean, I got in at a really good price, like it, at least today, it was one of like my best performers.
Hmm.
And if you get in at the right price point, if you're just wise about where you sit in your limit orders, I will say one thing about the company, Sir by Gold, they, as far as like the overall domain that I saw, they have the lowest all-in sustaining capital, that is cost of production, out of all of the other miners and producers that I've seen.
Hmm.
So it's most of their mines are like in Brazil.
Okay.
So their cost of production is extremely low. It's like $1,500 an ounce or something. It's ridiculous.
So moving on to the recent purchases, this would be Zach's recent purchases, just for transparency sake. This guy again, technically, it's kind of you
It
know,
just posted on the New York Stock Exchange. It was previously on the Oslo Stock Exchange.
interesting. And however, what I can say
The
is
product shipper.
it's like $5 and change. You
Hmm.
know, that's not going to break the bank. Um, Even if this was kind of a 50-50, roulette kind of buy, like 20 bucks, it's a little bit more than 20 bucks, gets you five, roughly four shares. So, um, you know, it's not that bad. It's not the end of the world. Now that being said, I'm sure Zach had some pretty good reasons for picking this.
Oh yeah, yeah. I'm not gonna buy something if, I'm not
Sure.
confident. And so we talked before about with shipping, the difference between like, most people want to look at like the very large crude carriers
Mhm.
or stuff like that. But really when you break it down due to the crack spread differential, and when you look at the fleet,
Mhm.
this company actually owns one of like the newest. Usually, like if your fleet is old, you're gonna have to retire them or spend a whole bunch of money to repair them. They're not going to be as reliable or as efficient, so on and so forth. This company has like a brand new fleet of medium range product tanker fleet.
Mhm.
Okay. So what I'm basically saying is the reason why I like this company, along with some of the other shippers that we've talked about, first of all, they only do products, which are way more expensive, which means they do that like they get that ton per mile deal where it's like they get the more valuable the cargo, the more they get to charge to ship that cargo.
Mm.
Okay. And they've got a range of medium size, not really large size, but medium sized product tankers. Okay. The reason why that's good is that makes them more adaptable. The larger the fleet, that is, like the larger the ship itself, that means that they can only go into deep water. If
Mhm.
you have a medium sized tanker, that means you can basically go anywhere. Okay. So not only you can, navigate into smaller channels, you can, pull up right on shore. They're just way more versatile.
Mhm.
So the sort of fleet that they have and the cargo that their fleet carries I'm super bullish on. And as you can see, we just rocketed up from that, dip right there.
Yeah.
They're still at a really good price point, in
Yeah,
my opinion.
not only
So,
that, if as you draw the Fibonacci's here, it's a very easy to rocket up to 721, 873, or even 13, 15.
well,
So that
look at past performance
yeah,
there.
yeah,
So,
we
and
have these
how
spikes here too. Yeah, so
right?
that's a very and again, I think liquidity is part of that. I think it's a relatively new company as you mentioned, so you're going to see that, but that's okay.
Yeah, but if you own 100 shares, Danny, when you
Hmm.
bought it at $5 and you put in a limit order to sell it, astronomically high prices, man, you can turn a huge profit there real quick, you know? So I don't know.
Yeah, that's I mean that's if you get filled. Sometimes the liquidity risk here is that not all your orders are going to get filled. So just putting that out there, but yeah, in general, you're right. So here's Hafnia Unlimited. Actually, this is a great expository on technicals. We have a inverse head and shoulders here that we covered. I guess this would have been end of July. And kind of, wavered a little bit, but we do see this breakout here. When we covered this 756, again, I cannot I don't remember this one, but I'm reasonably sure I was just kind of like, you know what, fuck it, $7, whatever.
Mhm.
And we've already hit the next target here, 822. Again, you don't have to listen to me. I'm not making this shit up. Like it's right here in front of you, and we could probably find the pod where that was originally stated. But yeah, the targets are clear, 862 and 906.
That's another product tanker fleet right there.
HBM.
And all of these shippers I've screened too to make sure that they have really good like internal operations. Also on some of them, Danny, you want to check the dividend because the dividend payouts are extreme.
Yeah,
So I mean, you get in at a good point, man, and that
I
dividend can
think
really
we
pay
already
out
covered
long
this.
term.
We already covered HBM, already covered EQX. Gold, we talked about that is a it's CFD on the
Yeah.
actual.
Okay. So
Yeah.
I don't know. They're not all here. Do uh CBI. Yeah, do CBI real quick.
CBI.
That's a refiner that I've gone over and purchased. No, CVI is in
Oh,
Victor. VI.
all right. Looks like this has
Yep.
already been discussed on the show, and as you see, oops, let's zoom in a little bit. What I like about this, go away. What I like about this is, we have this fairly well-defined area, really establishing value here in between. It's a fairly wide, fairly volatile, but we have 1665 and 39, or 4320. Um, and you start to see this pressure building. All right. So remember when we talked about when volatility starts to constrict, what does that mean? It's like pressing a spring. And that spring, when constricted, what does it want to do? It wants to explode. So I think it's very easily that we'll be able to test 4320 here.
Okay, real quick, you can look at CVE if you want, but I want to
CVE.
talk about really quick about why we've gone over the miners the last two episodes
Hmm.
so far, and why in particular I'm so bullish on gold and silver, but I'm more bullish on silver than gold.
Hmm.
Uh, and so let me pull it up right here. And I sent Danny some slides, but I guess he didn't put them up. Okay, so when you look at it, there's been a historic gold to silver price ratio. Okay, historically it's been 15 to 1. That is 15 ounces of silver would buy 1 ounce of gold.
Hmm.
Okay. Now, what's really important to note, though, is that was back in the day when both gold and silver were actually above ground and relatively in abundance and easy to find and refine because the purity was there. Like people could just pick it up off the ground. Okay. So today, it's very, very, very different. There was a particular slide that I sent Danny that actually showed it was a graphic that showed how much deeper and how the cost of capital has gotten so much greater with time since 1900. And the gold to silver ratio now is roughly 60 to 1 or 80 to 1. Okay. Now, what I see happening due to basically the system of globalism and the power of the US dollar deteriorating overall, that system fracturing means things are going to have to revert to their previous energetic states. What does that mean? We're going to see a revision to the mean,
Hmm.
right? That is the cost of things like commodities, like real tangible things, in particular oil, okay, are going to be closer to the cost of production inside the United States, which is roughly $65 a barrel. Okay. We'll be lucky if we get that because they need to turn profit. Okay. Now, what's going to happen, what I expect to happen anyway, is since we're at a 60 to 1 or an 80 to 1 gold to silver ratio when the historic has been 15 to 1, okay, is we're going to see that revert.
Hmm.
So the reason why I've been so bullish on silver for such a long time, but in particular now, okay, is because when things do start to revert to the mean, one example to a similar geopolitical scenario is back during the OPEC embargo in the 70s when Nixon was forced to close the gold window. Okay. What we saw back then was silver went from $2 an ounce to
Hmm.
over $50 an ounce, while gold only 3x from there. So
Hmm.
you see how silver made up the difference when the system was stressed and couldn't sort of tinker and manipulate things like it got away with
Hmm.
before.
Yeah.
You see, when it's like when the tide goes out and you see who's actually naked, right? Then you
Hmm.
realize now the reason why I'm more bullish on silver now than even then in the 1970s when silver massively outperformed gold, okay, is because I mean, think about that. What's that? What's that an increase of? That's 20. That's 25.
Hmm.
Yeah, that's over a two. Yeah, it's over 2,000, right?
Yeah.
X. So that's huge. That's an
Right.
enormous gain in outperformance. Okay.
Hmm.
So the reason why I'm more bullish on silver now is we're likely to see history repeat, except this time, okay, silver is harder to find and it's an industrial metal.
Hmm.
Okay. So most of silver that we actually get above ground, we use in other productions, whether it's industry, medicine, chemistry, or whatever. Most of it's consumed. So the above ground supply, gold isn't consumed like that. Gold is still used as sort of like a monetary metal,
Hmm.
while silver, 80% of it at least is industrial now. And that's
And
consumed.
as
So
we're
they've
looking
actually
the as we're looking at the technicals here, we see that you're still early on silver.
Right. We're still really early on silver. And because there's just less silver now than there was in the 1970s, what I expect to happen is for silver to outperform again, but we're probably again, this it's hard to even do the math on this because the differences are so vast. Back then 80% of it wasn't consumed in industry. You
Hmm.
see? Now it is. So there's even less of the material to go around.
Right.
So
Right. Yeah. Absolutely.
it's, I mean, the sky's the limit as far as I'm concerned with silver, you know.
Yep. So we started with CVE. Why don't we, in this vein, look at our oil stock just to review
Yeah,
CNQ.
CRGY, Crescent is actually performing well now. So,
Well, let's do them in order. CNQ. Oh, and first of all, I guess before I jump into this, if we go back to CVE, look at where I put the little red lines where I bought. And if you remember, I was hemming and hawing because I had some time here where I was really kind of getting spanked. But all's well that ends well. This little cluster of buys, as far as the profit that I made thus far, I'm going to hold this, but the profit that I
yeah.
made thus far is more than adequate and little bit of pain for short term. What is the thing Trump said? Short term pain for long term gain. Except this time
Yeah,
it's
except
real.
in his case, it's short term pain for even greater long-term
Yeah,
pain.
just more pain. Yeah.
Just
So,
way more pain in the future. So yeah.
similar kind of thing that we see going on here with CNQ. This is another favorite of the show. The Fibonacci's were drawn a long time ago. You got plenty of time to get in on this one if you weren't paying attention or whatever. I mean, we still have room to go here. I always caution against buying at highs, especially with a stock this pricey. 70.59 is a little bit heftier than most, but a retracement to 67.30 or 64.42 would be pretty sweet.
I'm gonna
Uh,
admit, Danny, CDE is, I still think it's undervalued, even though it's
I
broken past
agree. I
highs.
agree. It is
So,
it
I
is an
mean,
all-time favorite of the show. This is very sustainable behavior here. Perfect Elliott wave kind of setup. I do see a potential for a little bit of a retracement. Just technically, that's fine. But
hope it
yeah,
does. Hope it does.
yeah, I
I
hope
mean,
it does because I would be a buyer here in the right around 30. Again, as you see, I bought multiple times here, so this is something I'm adding to as I am PBR. PBR is another favorite of the show.
this is
Um,
a dividend compounder. So,
yeah, exactly. So this is one that I'm less concerned that it rockets off to the moon. I anticipate that just because of market fuckery, it's likely going to stay within this range, although it certainly could have the potential to go further. But this is a high dividend stock that I'm just accumulating. It's certainly not going to go anywhere, right? This is the pride of Brazil, and for good reason. They're a good company too. And as you see here, I bought multiple times. Luckily, I got in at this little dip here. Still very reasonably priced, under $20. And the dividend, I believe it was in the fives last time I checked. Um, yeah,
well,
five.
it's the most efficient producer out of any of them, like globally.
Yeah,
Like their cost of capital per barrel is like $15 a barrel. It's ridiculous.
yeah.
It's like super inexpensive for them to pump that stuff.
So point is, if you follow the show and you followed me through some pain here, you're already in the money making what I did. I think I want to say I've already turned 10% on this off the top of my head, probably more actually looking at just the numbers, right? We're about, just under $20 and I bought, I guess my cost average, yeah, I guess maybe about 10%, but still not shabby. PR, this is Permian Resources. This is one where I hemmed and hawed and held this guy underwater as well. But as you see here, I'm sitting pretty. I bought somewhere in here, had to hold through some pain here. Let's go to the day chart. That a little bit better here. Yeah, much more detail here. So you can kind of get a feel for how long I held this in pain. But yeah, a nice breakout here. This is a very good sign. We've already hit our first target here at 24.22. Again, the Fibonacci's don't lie. You see them already drawn in a previous episode. Actually, quite a long time ago, if I recall. This is probably when we first started the show. I think
Hmm.
when we featured
This is one
Permian.
of the first stocks that I bought, actually,
Yeah. So this one is.
way back in
Um,
February. Yeah.
not only a winner, but it's also somewhat nostalgic. One of the first stocks covered here, already hitting its first major price target here at 24.22.
Now, zoom out a bit. I'm curious what the next vector's up as far as like, because this one for me, yeah, this is the one that I'm looking is going to be most likely to be a rocket ship once momentum hits.
Yeah, so we
So,
have 2713 as the next target. And just the way the Fibonacci's work, there's a wide space here between 26, or at least the way it's graphing them. 26, 2.618, excuse me. That's 35.55. So I foresee basically the next Elliott wave, the next, impulse of the Elliott wave, maybe doing something like this. I think
yeah.
if you just look at the chart here, that's a very reasonable behavior given what it's already done. So I don't think I'm out on a limb here. Of course, we have to anticipate little retracements. That's fine. That's what the market does. But you know, 6 months to a year, I think we could easily be at 35.55, especially now that we're starting to see the market finally kind of take into account.
Realize, yeah.
Yep, exactly.
Now,
Uh,
one thing I'll say about Permian Resources is part of the reason why I like the setup for this one so much is because they actually have the lowest, as far as U.S. producers go, they've got the lowest cost of capital to pump a barrel of oil.
yep.
So, and they're, how do I want to put it, they're the ones most leveraged to the spot price as well.
Mhm.
So as oil increases, their free cash flow and revenue just, pile and pile and pile up. They're going to be swimming in cash.
Yeah, so speaking of which, I believe Crescent Energy had a very similar kind of outlook. As you see here, I bought, multiple times. Of course, I got a shitty price here, buying at the top as I usually do, and then added to the position, as it went down. I want to say my dollar cost average would be like in the tens here, and as you see, we're already breaking through. 13. So that's a 30, what is that? 30%, almost 40%,
Mhm.
climb. So not too shabby.
Not at all. And remember, this one is a late bloomer too. So we're seeing it perform very well from when we got in, but like it's this one I expect to be like when people realize that like the market realizes, oh crap, this is like permanent. Like this isn't like not it's not going to open up, guys. And then people start to pile in. This is going to be the last one that is still going to be affordable enough for people to go, oh, here's my money, take it.
Yep. And
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 yeah,
yeah, exactly. So we're still well within the realm of
still kind of
affordability
early.
here.
Yeah. Mhm.
Still early, and I think what Zach said is actually very, very important, right? So it's like, if you're starting out and investing, what's going to look more enticing to you, the 30, 50, $90 stock or like the $10 stock, right? So I think that there's still a lot of allure here for the retail investors.
Right.
CVI, another favorite of the show.
When PR and all those other companies have priced out because their stock valuations have screamed higher,
Mhm.
Crescent's still going to be sitting there, but they're still incredibly profitable with cash flow and dividend and all that.
Absolutely.
People are going to pile right in that sucker. Yeah.
CVI, we just covered that.
Yeah.
Let's do PVF. I remember I did that last time. I just want to type PDF. I don't know why. Um, and this is a banger. You could again, this you can't lie
Nailed
on
this
this.
one, didn't I, Danny? Nailed this one.
Yeah, and well, not only that, but the technicals are just perfect. Like
Mhm.
if I was to create a technicals course and make shit up, it wouldn't be this good, right? So we have actually four should be a little bit higher, but anyway, you get the idea. So we have this impulse correction and then blasting off into the next impulse. Just look at how well the Fibonacci's predict these targets, right?
Price
So
point. Yeah.
so yeah,
Mhm.
exactly. So my guess when we first did this, we were probably in the 37s. I don't think we had broken highs before that, or else I would have drawn the next leg. Um, and we've already hit two price targets, 62.52 and 75.81. So this is a banger. We need like a little like ding 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 money from like
Yeah. Yeah.
one of
Me
those
too.
sound effects.
Mhm.
So
Yeah.
yeah. Ding ding ding. Par.
And this one still, Danny, this one still has room to grow. We'll see what happens with oil prices, but if oil prices spike, I would expect this to drop. If they stay around current levels, this is just going to be, it's just going to keep on,
Hmm.
it'll do I mean, it'll retrace and everything, but the trajectory is further upward.
Yep.
And the reason why is with PBF, most of their cash flow comes directly from diesel, which
Mm,
is what we actually have a shortage of now.
right.
So all the more diesel the more the market is short of diesel and needs it, right? The more they can turn that cheap American crude into diesel and then sell it off into that market at current and get that cash flow. I mean, they're
Yep.
going to be moving cash.
So this PAR Pacific Holdings, this is one again, we've drawn the Elliott wave here, looking for that market cycle where we can purchase here at lows. We're at highs right now.
I dipped out of par. I sold. I sold at this, this most recent high, and I was like, okay, because I expected it to retrace from there, and then I took that money and then bought the shipping companies that we
And
uh
now that
talked
you
about.
mention that, I am reminded of that kind of pendulum effect,
Right.
right? And so if I recall, hopefully you use my analysis. Hopefully that helped you to set your exit, because that's a perfect time to exit. We are at highs right now.
Hmm.
I would be a buyer here again at 47.40 after we have this retracement here. Do not buy at highs. Again, I believe that the pendulum has swung. It's going to come back and then do its thing
Yeah.
again. So it's just
Or it could, honestly, Danny, if oil prices go up much further, like past 100, it could crash. Like it could literally just crash even further than that, because that means they need to buy the crude. So
yep.
as the crude gets more expensive, right, then they're not as profitable. So
Same thing here with Dino. I don't mean to be disingenuous here. I'm not trying to, say that I called the high here. I didn't. I called it right here. Okay, off by a couple bucks, but if you don't mind, I'm just going to update the predictions taking into account that new data. Again, not saying that I called that specifically. I did call 93.55 and we're at 97. So it was off by, 4%, whatever.
now,
Um, the the
remember
the
last Yeah, sorry, but remember last time, you made the prediction, and then I believe it was this one where I said I don't think we're going to see the drop for this one. I think it's going to, we're not going to get a chance to, because yeah,
maybe I'm going purely technically here. So,
yeah,
sometimes, most of the time, you at least, if you're really good with technicals, most of the time you can at least understand what kind of phase you're in. Then external shit can happen. I'm not saying that it's not. There's no silver bullet here, right?
but
What I'm saying is that if we were to see our Elliott wave correction, which I believe is highly likely to come into a play in some way, shape, or form, we're going to see it around here. Why? Just because of the way I drew this here. Now, is it possible that some game changer happens and we skyrocket to the moon? Always. Now, if Zach is right, and we don't really see that corrective phase, just because I have this corrective phase drawn like this doesn't mean there's other ways they could do it, right? So if you've heard me say before, like sideways corrective phase, okay, that's still a correction. It's just not this sell-off here. And oftentimes you see that a great example, and I'll bring this up again, is with gold. Okay, so here, this is a great example of a sideways corrective phase. Did it do the little zigzaggy thing here and hit? No, it did not. Okay, it kind of, maintained value, and that's still valid as well. So I have these drawn out under the situation that where are we here? Yeah, that we'll see that doesn't always have to work out that way. But
right.
either way, I think we're due for a corrective phase here. It just might not be the zigzag. It might just be some, my technical term, wiggle waggling.
Right. So Danny is 100% correct with the technicals. The reason why I didn't think we were going to see that sort of retracement specifically was because of the like literal historic diesel shortage that we have globally, right? So it's just when you have like a material shortage of something and the market knows it,
Yeah.
that's going to be hard for
Yeah, and
people to sell those shares,
you
you know?
can't interest rate hike your way out of that. You can't stock buyback your way out of that. Like you just don't
Right.
have stuff. It's a physical thing that
Exactly. And
physical
there's not
thing.
enough of it. Right. There's not enough of it. So it's just going to be what it's going to be. Yeah.
Physical stuff, right? Moving on to shipping. That's the last and final kind of subject area or sector rather of our show for today. ASC, we've already drawn the technicals on this. Unfortunately, I don't really have any Elliott wave drawn. I don't know where we covered this, but we could see that it's, in the past, since we've been doing the show, it's been, up and to the
Going
right.
long. Look at that.
Yeah,
Yeah, that's healthy growth too, in my opinion.
it
That's
is.
yeah,
It is.
yeah.
And I'll draw like one thing, and I didn't mention this yet. As we do the show, you'll learn more and more about technicals as the subject comes up. Here's a great time to bring this particular aspect up is that, if we zoom out, we could see these Elliott wave patterns or whatever. Elliott waves are fractal in nature. So what does that mean? What is a fractal? It's a thing that looks like itself when you zoom in. Of course, there's technical definitions, but basically that's what it is. Now, if I
Self-polarity. Yeah.
self-similarity, if I zoom in here, what do you start to see? Another Elliott wave, right? So what Zach is saying is absolutely technically correct in the sense where we're seeing this nice zigzag effect. I could even draw it out if you want. Uh, where to go? Hey, there we go. So there's a couple ways you could do it this way, maybe, or you could have this encompass. It's typically four, doesn't go below one, but just being picky. Yeah, something like this. This looks perfect, right? Um, so in other words, when you don't see healthy growth, what do you see? That hyperbolic, that
Hockey
that
stick.
yeah,
Yeah.
yeah, exactly, the hockey stick. That's not good. This is perfectly sustainable and indicative of healthy growth. Yeah.
Yeah. And I think the yield on that one's pretty good too.
The dividends.
Them
Let's
and them
check
and
that out.
DHT I think are pretty high. But
3.57. That's not
okay.
too shabby. It's still not shabby. You know what I mean?
Yeah. And they're a product shipper.
Yeah.
Um, Actually, I think they do crude carriers and product shippers, but it's
Uh, DHT again. This is a similar.
this is the dividend. Yeah, I'm sorry, this was the dividend one I was thinking about. Yeah.
So if we look at the 7.42, that is insane. That's very, very good. I'm a little wary of buying at highs here because I got fucked on the other ones doing that. But this is some.
Yeah. Yeah, just wait for it to
Correct. Yeah. So, again, the beauty of these technicals is I know exactly where to buy. Remember when I was talking about a sideways corrective pattern? Well, that's exactly what this thing is, right? So if I look at the growth here, you can almost just kind of envision yourself the Elliott wave overlaid here, and this corrective phase is kind of going here, bounded by 1664 and 1973. We're cracking upon the upper bound here, which means highly likely we'll just see a technical retracement. That's okay. Because I'm a buyer here in like the 18s,
mm.
1664, thereabouts. I think
It's got resistance around 1750 is a good spot, I think.
so. Yes, yes. So
Yeah.
you see this little, we literally call this a congestion zone for
Mm.
obvious reasons. There's a lot of activity there. I think what Zach is saying is perfectly reasonable because when you see that congestion zone, it does kind of act like a two-dimensional level.
It'll drop down and
Right?
hit
It, it, it'll it'll
1750,
hit it'll hit somewhere in here and be like, uh-oh, and then it'll bounce.
and
So
then it'll
yeah,
retrace higher.
yeah,
Yeah,
yeah. So
exactly.
if you notice that congestion zone is bound precisely by 18 even and 1881, which are levels
Right,
that I mentioned. Um,
right.
so ECO,
This one's a little expensive for a shipper, but they've got the full gamut of crude and product carriers.
yep.
Uh, and I'm hoping for this to retrace because that's a lot for one share.
Yeah, it is. This is something I would,
There's
especially at highs, right?
right.
So, the price point plus the fact that it's at highs, for me, that's a no-go right now. I'm looking at, it does look like it broke out of that Elliott wave into a new cycle. So I'm looking at 57.86, maybe 53.35 if you could get that, but definitely not wouldn't be looking around up here at highs. That's it's a little excessive to me.
I wanted to mention them because they've got a really, really wide global footprint. They've got an enormous fleet. They do crude and products. And they have I believe they have the newest fleet. So it's like this would
Mm.
be something that you would buy and probably want to hold on to for a while.
Yeah,
Uh,
I think same with FRO, same with this one. As I recall, I
yeah,
bought this one, as you see where the red line is. I always try to be pretty honest about where I bought in. And this one, again, is something that I held underwater a little bit, was kind of, cursing in my head from time to time. But as you see, it broke out in a very, very strong way. Already hit the target here at 44.91. Zooming out a little bit, we see 51.53 is the next one. As I recall, this is um, a good dividend.
yeah, it is. I
Yeah,
don't remember what it is, but actually, Danny, I think you got in at a good price. I don't know why you would be kicking yourself for that.
because
Big deal.
it retraced a little bit, and
Big deal.
I get fussy. So 719. That is insane.
Isn't
And
it?
it's, especially for this price, this is not. We're not dealing with something in like the $10 range, right? Where like a 10% dividend is like, okay, whatever. But, we're dealing with something in like, we're going to be knocking on the 50s here pretty soon. A 7% dividend, that's pretty incredible.
Yeah, and they do crude and product, which is phenomenal, of course, for
Yeah, I
this
think that,
sort of
okay,
setup.
we already covered HAFN. NAT, this is something I've actually had. Nordic
I was
American,
thinking
yeah.
of selling this, but I think the dividend
Nah,
was too high.
no, I don't. I recall buying this. Quite some time ago, like when it was in like the $1 range or $2 range or
Yeah,
something
you
like
bought it
that.
at like $1 to $2,
Yeah,
and I
yeah.
got it
This
at
was
like
this was
five for
yeah,
four
this was,
fifty.
but that was well before we were doing this show,
Yeah,
so I'm not counting it. I'm just kind of saying. And dividend yield of
yeah,
8.87%.
that's
So, yeah,
yeah,
that's a
yeah,
banger.
absolutely.
STNG, um, Scorpio. Huh. Clever play on words there. See what they did
Mhm.
there? Yeah, clever. It's cool though. So we
I got
have
in at a good price, but this one's been disappointing me out of all the shippers. Notice
um
it's not running up along with the rest of them. I mean, I got
it
in at a decent price, but I
it
expected more.
isn't, but just technically I could see there are some more advanced Elliott wave patterns we could draw here. For those of us who were interested in that sort of thing, there's actually one that goes something like this, and then it has a mirror image, which is exactly what we're seeing here. So I think I'll throw you a bone here and say that we're still in this technical sideways correction. It's not the end of the world. I see what you're saying. Don't get me wrong. I just told you I was the one who was looking at FRO and being like, oh man, because I was like, you know, -1% or whatever. So
Yeah,
I
yeah.
I understand. I understand where you're coming from. I just wouldn't be worried about it. The technicals are sound. Um,
You mean
T
for it to shoot up higher
yes,
from year to
yes,
yeah.
yeah.
I'm just not. It's weird and it's aberrant in that it's not following with the
Right.
rest of
Well,
the walk
I
on the
think
upward
to
side.
your point, you expect everything in a sector to behave the same way. That's called intermarket correlations. In
Or
fact, that's
similar. Yeah, right.
in fact that's a very valid way to actually trade intraday. See that what we're looking at, we're more like swing trading, and long-term investing. But if you trade like intraday and you're actually trading at the open or whatever, what you want to do is look for intermarket correlation. So if I'm trading, you know, tech stocks or whatever, and I see Nvidia blast off, then Apple's blasting up, Microsoft is kind of steadying. That might be a sign to me that I want to go with the guy who's lagging, right? Because he's going to take off too. That's just the theory. We could obviously pick apart what I just said in terms of the tech stocks, but so my point is that we're seeing this blast off in the other ones. This guy's kind of hanging out. He's still in a sideways corrective pattern, knocking on highs. As you see the volatility as kind of coiling up here, I think it's perfectly reasonable that he'll catch up.
Yeah. So speaking of tech, Danny, I don't know, man. I'm seeing commodities. Oh yeah, this is one of mine that are really that's doing really really well. It's TK. Oddly enough, a lot of these companies seem to be Greek for whatever reason. I don't know what the
I think
history
it's
is.
the
But yeah,
geographic location. There's also
that makes
um,
sense. Yeah.
the location is one. Number two, I guess partly these go hand in hand, but the Greeks are a very seafaring people. It,
Athens. Yeah.
I mean, it just goes into their history for thousands of years. So I think that that's a
Mhm.
perfectly reasonable. I didn't know that, but it just I have some very close friends who are Greek and just absolutely obsessed with like sailboats and seafaring and so forth.
Mhm.
So yeah, that totally fits. Already hit as you see here, I've drawn the Elliott wave. See, this actually kind of mirrors the other one, right? So
Yeah, but this one's rocketing up.
but right, so we see that same kind of pattern, that like W looking thing, right?
Mhm.
And then we rock it up. So again,
Maybe we'll see that with that sting. So I don't know.
it's just like this
Yeah, yeah, yeah. Hey,
and this.
you're right.
Yep. So
We get
again,
we get patterns. Yeah.
just saying, rocketed up here, hit 92.43. That is the first target. And still the buying here is very, very strong as we see with the KMI here, the Kovac OBV in particular.
Maybe
Yep.
maybe I should sell that one then.
Would honestly, it wouldn't hurt to take profits here and just buy
Yeah,
back. Ju- you
might
know,
do
just
that. Yeah,
yeah.
buy back at a lower. Yeah.
Yeah. And the final selection for today is PXS. That is man, I wish I had the where oops. Oh, so I guess we already did this one.
I think
Yeah.
that one was in the
Yeah.
earlier. But you see this nice run up that we've seen since
Yep.
I brought it up. So
Yep.
uh, and this I wanted to ask one thing with related to tech. What are your opinions on tech stocks right now, Danny?
I think they're largely overvalued. I think if you look into the S&P, um, so like, sorry, it's so messy. This is one that I follow daily. So if we look at ES, that's the futures contract on the S&P. Look at how high we are. Um, it's difficult for me to justify yet another breakout before, at least some kind of retracement. And the S&P is tech heavy. So if I'm looking at the S&P saying, man, okay, just based on our show and all that I've talked about thus far, would you buy here? I mean, if you've
I
listened to a
mean,
word I've said, right? Zach's more on the fundamentals, but especially me with the technicals here. This is not a place you want to buy, right? And so, what is the S&P made of? Well, right now it's super heavy in tech. So this is not, in my opinion, when you want to buy tech. Now, me, I got into Apple at like $100 and like, so I'm like way ahead on my tech holdings. I'm probably just going to hold ad infinitum, if not add. But if you're the type of person that likes to say buy low, sell high, like Zach, this would be a time where I would maybe think about doing that, right? Because if we compare these, like let's just say everybody's golden boy Nvidia, I have some technicals here, and we're here near highs, and we're stuttering. This. If you listen to a word I said on this show, there's multiple indications that we're at a high here. Is it going to go away? Is it going to go bankrupt? No, but we're certainly we're certainly top heavy here.
it may not tomorrow, but when I looked at the circular financing that's going on in the tech sector, Danny, and I almost crapped myself.
That's going
I
on.
was like,
That's been going on for decades. That's not going to change.
yeah,
I mean,
but
I'm not saying that I own this or that I
yeah,
recommend this stock. I'm just
yeah,
telling you that's a thing, right? It just
yeah.
same thing if we look at Apple. Apple is one that I own. Ah, crap.
And
Again, sitting here near highs. Is this something? This is actually a pretty good exercise in Elliott wave too, right? So, crap. Let's do this. Sorry, you were saying, Zach, while I draw this?
well, yeah, I'm actually, yeah, I'm concerned at the over to me when I look at the tech sector overall, just about everything screams fragility to me. And with energy being what it is, with the dollar, with the action that's going on with the dollar and the treasury and it's just it to me when a system that fragile gets confronted with material reality of physical shortfalls of energy, fuel, molecules, logistics, and things like that, I don't know. And since it makes up so much of the S&P,
Yep.
I see a lot of fragility
And
there
and to your point,
overall.
like let's, our powers combined kind of thing. If you're talking about the fundamentals, let's pair that with the technicals. Well, what do we see with Apple? Again, we're knocking on highs. We're a stock that's knocking on all-time highs. How much longer are we going to be able to sustain this behavior? I mean, it's just up and to the right, right? Now, this in defense of them, as you see, we have these nice Elliott wave things. It has been fairly, healthy, if you will. However, I think that we're due for, I think this is a fairly conservative dip. Like I'm not even a seller at this stage. I would be buying more. I think Apple's a good company, but the issue is we're talking about tech and the overweight nature of that in the sector and its contribution to the S&P. So, again, the whole point, ever since we've been doing this podcast, we started it because I think both Zach and I see a paradigm shift in the markets where we're going from this tech heavy AI boom to real things that are scarce. And there's reasons for that, and that we're confronted with a situation for which we have no choice, right? Hormuz isn't going to be open anytime soon. We're going to have to see a global shift back to our side of the world, right? And these are very good reasons why you want to take a look at the selections that we've made and that are really crushing it right now.
And with that said, none of the fragility is going to change until the United States can get its spending under some semblance of control, Danny. And the only way
Absolutely.
you're going to be able to do that is to cut defense spending.
Yep.
That's
Yep.
the only way you're going to be able to do that. However, do you think the Trump administration's ever going to do that?
Right. It's like, they tout the DEI crap, which, neither Zach or I are for, but when you look at the piece of the pie for that, it's like defense trumps that, pun intended.
Yeah,
Yep.
yeah, big time.
So,
Yeah, that all the DEI, that's all noise.
yeah.
The where we're not getting, oddly enough, because it's the military, we're not getting a lot of bang for our buck too, is in defense.
We well
Like
we've
we need a
highlighted that.
restructuring of the whole system.
And we've
So,
highlighted that in the sense that the Iranians can have like a $5,000 drone that it takes us like $10 million to down.
yep,
It's
exactly.
just yeah.
You can't do that forever.
Yep.
So, yep.
All right. Well, that's about it for the show today. Great one, Zach, by the way. Great picks and great bye everybody. Great follow up on some of what we already had. So all right, good night, everybody.